let me fix your understanding of the setup.
Yes, please. Okay.
So the first thing I want to talk about is this vertical squeeze that you keep doing with your chart.
Yeah.
You don't want to do that. Just leave it as it is. Because if you
Okay.
do this, it changes the picture. And we are pattern-based traders. So you do not want to distort the pattern. If you distort the pattern, you won't see the actual range of that chart between the high and the low down there, right? And the second thing I want
Yes.
to talk about is that you want to, because it's a pattern-based trading, you want to stick to a time frame of trading. So if you choose to trade the M1 for a batch,
Yes.
all 20 trades must come from that time frame. You cannot have a setup one on M5 and a setup one on M1 and a setup one on S12.
Yes. Okay. Yes. Yes. Okay. Yeah, I mean, really, having played with all three now, I think I feel more comfortable on M1. Uh,
Yeah, okay, so if you're
but yeah,
comfortable
but
on
I can see that you
M1,
guys.
you shouldn't take trades on M5. There's a fundamental flaw in this, is because both the time frames will require different analysis. So if you take a trade on the M5, then you have to do this. You have to bring the M5 to this side, right?
Oh, okay.
And on here, you will have to have the 5 times higher time frame, which is the 30-minute chart. So if you take
Oh, I
this, yeah, if you
see.
take this setup one, then your 5 times higher
Uh,
time frame is the M5. And in this case, if you look at this is not the correct trade because it's going against the purple. So the
but you
M5,
see, again, that's where I get confused because I remember on the stream on the chat one day you said that you don't give a shit about that. That was your expression. You don't give a shit about the purple on M5.
that is true. You don't necessarily want to overanalyze the thing. But if you were trading the M5, then you'd have to look at the M30. And the M30 trend, if you look at it, is up.
Yes. Yeah. Okay.
So the reason I
Yeah.
mentioned purple was to mention the trend. Now, if
Yes. I
the
see.
trend was, if predominantly was going down and I was keen on going short, then I would
Mm.
kind of ignore the purple. But if the purple was in my favor, then that means the trend is even stronger in my favor. So,
Yes. So yeah.
so
That's.
technically, in a way, I do give a shit about it, you know. Um, but
Yeah.
so to speak, in that time was that if
Yes.
you see a setup that has a clean open gator, and in this case I
Yeah.
cannot call this a clean open gator, it's just that it's actually reversing back. So the M30 is not giving me confidence to go short, but that's not the point. The point is that if you were to trade the M5, then you don't need to look at
It should
M1.
display. That's true. Yes.
The
Yes. Yeah. Yeah.
S12,
Yeah.
yeah, it's gone. So the moment you
Yes.
decide, you choose to trade, oh, this is a setup on an M5, and then you'd say, okay, now I have to look at M30. So now you have expanded your horizon to another chart. So you're looking at S12
Yes.
and you're looking at M1 and you're looking at M5 and you're also looking at M30. This is going to confuse the hell out of you and you will have a problem. So
Nice.
if you want to trade the M5, the M1, you want to keep your charts M5 and M1.
Yeah.
And
Yeah.
when
Like
your
this. That's actually
M5,
how I have
so when your M5
Yes.
is in wave 4, like this, when the
Yeah.
gator sleeps and the price is inside, that means there is no trade. You're not taking any trade. You're waiting for
That's
this candle here. You see
yes.
this one? So
Yes.
once this happens,
Bricks out of the box.
yes,
Okay.
when it breaks out of the box, that's when you start looking at the M1 chart for a possible setup.
Yeah. This is important. Yeah. This
Yeah.
is
So in
it.
this case, we have seen a new peak here, and then when the AO was peaked and then it was crossed zero line, you'd be keen to go short over here because you see, this is where you would have received your probably a green dot and then a fresh new box, and you have a gator sleeping. Unfortunately, price went up, right? So the setup was cancelled. But this is where you would see, can you see this, the M5? On the M5, you have 3 candle pullback, right?
Yes.
And then on the M1, because you had a green dot, I think on your MT4, you would have seen a green dot here. Green dot means wait
But
for...
the gator is not sleeping though.
You're looking here. I'm looking here.
There, yeah.
You're looking at this.
But you see,
that's not what I'm looking at.
No, where you are at there.
Here.
You see, yeah, the gator is not sleeping. So that confuses the hell out of me.
Why do you think gator is not sleeping?
Because the green one is like pointing to like 1 p.m. on the clock. You see, I thought sleeping would mean that they were like,
no. That's not what it is. Hold on, let me show you.
Okay.
Let me take you to the actual time. So we will do the bar replay, right?
Yes.
Over here you have a green dot. On your platform on MT4, do you see a green dot there?
Okay, sorry. I just shut down the chat
okay.
so that
I'll have a look at it myself.
It
I will
doesn't
confirm that to you.
delay.
Not green dot, actually pink dot, right? So basically this candle, because it closed below the green line, is a pink dot. Why? Because it has broken the box low, right?
The box.
And
yes.
Pink dot means wait for a fresh box, right?
Yes.
Now, you're disputing that the gator is open or not sleeping over here, right?
Yes.
Now, this is good that we are doing this in video. Now, gator was open here. Let me bring my arrow. Let me bring my arrow. Here we go. So when the market was going down, gator was open, right? Gator is open to the downside.
Yes.
Right?
That's right.
And then when price went up, and remember gator and AO are lagging indicators. They lag a few bars. But that's okay. Yeah. It doesn't hinder. It's actually a benefiting thing for us. So it goes up and pulls back. When it pulls back over here, at this point your gator will be three bars in the future. And you see this over here, the first cross. As soon as the green touches the red line, that's it. We call this a sleeping gator. It does not matter the nitty-gritty of the gator, you know, that where is the line above, below. No, we don't care. Like right at this moment, you would think, oh, technically the gator is open to the upside. No, that's not what it is. In fact, when we first started it back in the days, we also used to call it, even if you have the gator open towards the purple, can you see this? If you suppose you call this gator open towards the purple, we will call this as the correct gator because it's pulling back up. But we are going with the trend of the purple. We're going with the trend of the purple, and we're also going with the trend of the Elliott wave. We have a 3 down, 4 will be up, and then we'll see a 5 down. That's what we are assuming. Now let's actually change it to a little bit here. So you will see the gator is open to the upside, right? In your definition, the gator will be open to the upside, but on our definition, any gator that is open to the upside but against the purple is a sleeping gator for us.
Oh,
yes.
Really?
Yes, this is a sleeping gator. Now, it's not really sleeping, right? Because it's awake, but it's awake to the opposite, to the wrong direction.
Opposite, yes.
Right? So the box is stepping up, but gator is not really sleeping. We are waiting for it. So if we go forward, we're like, okay, now the gator is sleeping, and now price goes up. So if you look at this moment here, just one candle before, let me just go one candle earlier. See, around this moment, can you see this? Price is going up, but the gator lines have intertwined. And a few candles later, I mean, what ideally what would have wanted was the price to actually go sideways here. So this box would be created, right? So let me take it forward a bit. Now can you see the box low here? Now, unfortunately, price went up and broke the box high. But in this situation, around this candle, I would be ready and put a pending order 1 point below this box.
Wow.
Yes.
Yes.
And I'll be looking. So if I mark this over here with a line, right? Let me just remove these lines.
Okay.
If I remove that line and this, you would see I'd be setting a pending order here.
Yeah. Wow.
Can you see the lines, or shall I make it darker a bit?
Yes, the dots with the cross. Yes.
Yeah. So now this is the interesting bit. There's another line here. I need to delete that. What's this line? Okay, that's the price. So I'm going to change the, I'm going to put this horizontal line so you can see at the same time. Can you see?
Yeah, I can see there now.
Three candle pullback on the M5. And then you have this box. Now, if you follow the pink dot mechanism, you know, we don't want to enter if the dot has broken the box. We want to wait for a fresh cross. That has helped us save a rent. Or the 3 candle pullback, you would have paid a rent here because you would be in on this candle. But the box has saved us paying that extra rent, and price goes up, right? Now, let's suppose we are trading this setup here, the M5. Let's suppose the M30 is correct. So if you look at this candle here, you know, Gator is sleeping, and this is the perfect setup one. But the problem here is that the box in your entry, you know, if you were to make your entry here, correctly so, you thought, oh, levels to the left were close, right? So you didn't want to take an entry here. Instead, you went with an entry here, right? But the problem with that is you can do that, but then you have to look at another thing, which is what is the distance between this level here and my stop loss, which should be on the other side of the box. Now, if that is more than 20 points, it's not feasible. Because market is not going to do 100 points moves on a regular basis. Right? So if we count this from here to here, I think within 10 bars, it has moved 86 points.
Yes.
Right? So you're making entry here at 26, I think it was. And this is a different feed. But on MT4, it was 26 here. Now, it moved quite a lot in your favor, but you would have gone out break even, right? Because
that's right.
Your stop loss was too big.
Exactly.
So for that reason, if you ever take the M5, you cannot have more than, you know, bigger than 20 stop loss. And for that reason, if you took your trade, let's suppose you took your trade here, your target would be somewhere here. And you probably got yourself 35 points or something. But how would you achieve that? Well, to achieve that, you need to utilize your target one. You know, whenever you make an entry, you also want to know where would be my target. So you want to draw a target zone 1 using the peak of 3, or we can actually use this level here. We can even use all the way there because, you know, can you see AO where it crossed?
Yes.
So that's the beginning of wave 3. Right? So this is whole wave 3 here, and this is the peak of AO. So that's where target zone 1, you know, fib expansion will be plotted, and the next line will be here. Guess where it stopped? Guess where it stopped? Exactly at target zone 1, right? Now here comes an important point. If you're making your entry here, you want to calculate the distance between your entry and the target zone 1. This point is very important. You need to understand that. So if you look at this, this was your stop loss. 53 points, you said, right?
Yes.
And now count the distance between your stop loss and target zone 1. What is that?
That's about 30.
30.
About 30.
That's less than 1 hour. We don't want this. We don't only want this. We don't even want 1.5. We want 2 hour distance. And that is the concept behind big box. When we say the box was big, we mean to say that that our stop loss, basically what we're saying is that when I wanted to open a restaurant in this small town, but the cost of the restaurant was 100,000 euros. But when I calculated the people living in that town and their habits of eating out and stuff, I realized that it would take me 10 years just to cover my cost.
Oh, wow. A
Right?
decade.
Yeah,
Yeah.
that's what it means in chart terms, right? So what you're saying is that
Yes.
I'm investing 53 points of risk, but the potential is only 29 points.
Yeah.
So if I took 100 trades like this, at the end of it, I will not have made money. Which is
Yeah.
why, um, okay, if target zone 1 over here was 100 points away, then the 53 point stop loss would make sense,
Yes. That's
right?
true.
So even if you took the inner one, let's count that. Let's count it. Let's suppose you take entry right at the box. Your stop loss will be up there. So you would need, let's say, 35 stop loss. Now let's calculate the distance between your entry and the target zone 1. It's still 42 points, slightly more than 1 hour. Still not a feasible trade. You get it?
True.
That's the point
Yes,
I
I
wanted to
do.
make. So,
Okay. Yeah.
okay, would I take this trade? Can I take it? Not in stage 1. Probably not even in
Yes.
stage 2. In stage 3, I can show you a technique which would be this. If I'm keen
Yeah,
on
I remember.
if I'm keen on taking this trade, what will I do is that I will take an entry here and I'll
The
set
stop loss
a
of
20
the
stop loss there, which would
Yes.
be above this
Yeah.
candle. And my target point
Yeah.
would be at target zone 1, which is 40 points. So from that point of view, I had a 2-hour trade. But in your case, you didn't even get to 1 hour because your stop loss was 53. So these are the mechanics of trading that we need to learn. And you will learn these if you apply the stage 1 of the setup 1. So stick to the M5 and M1, and you have to apply this method whenever you set a pending order. You need to count the
Yes.
distance between target zone 1 and your entry. So if your stop loss is 15, your target zone should be at least 30 points away. Now, sometimes you can say, 30 comes slightly below target zone 1. Fine, that's okay because it's not a science. It's not that it will always stop exactly at target zone 1. It sometimes will stop slightly before target zone 1. Sometimes it will go past target zone 1. Sometimes, it would go past target zone 2 because that's how wave 3s are formed. You know, like sometimes this price would have gone all the way down and this peak would have crossed the low of this, and we would, like what happened the other day when it wasn't stopping, it was just going. So what was happening is that what you thought was a 5 actually became a wave 3 because the new peak was created. Actually, let me go to that chart so I can show you. I think it was it yesterday? No, it was the day before yesterday, wasn't it?
Yeah. I remember. Yeah, that was the one Alina labeled. I think it was the day before yesterday.
This is the M5 chart. Yeah,
Monday.
it's this
Yeah.
one.
Yes, that's the one. Yes. Just kept going. Wow. Unreal.
So even today, there's an example. I'll show you this. Watch this. See, today at London Open, right? You have a peak here, right? Price pulls
Yeah.
back. Obviously, for a stage 1, you would think, it's gone past the purple. It's
Yes.
kind of set up 0. Look at the box. The box is too big, right? So you cannot take
Yes.
that. But that's not the point at the moment. What I want to make, the point I want to make right now is about the peak of AO, right? So at this point, you have this as wave 3. This is wave 4. But guess what happens? As the volatility hits, and remember, at London Open, there will be high volatility. So we're expecting moves. And as the market moves, over here, can you see this?
Yeah.
The AO
Exceeded.
has crossed this level. So
This
now we
one.
immediately accept. We think, oh, what we thought was a 3 actually is not a 3 because now this move is actually stronger and bigger than the previous move, and AO has crossed below the 0 line. So that means this is our new 3. Now, if this is our 3, then from that assumption, oh, so if this is 3, then what we thought was a 3 is actually a 1. And what we thought was a 4 is actually a 2. So then we can start counting and say, okay, we have 1 here, 2 here, the next one is going to be 3. And then that kind of puts me into a new sort of thinking, like, okay, if this is a 3, then I have another opportunity to wait for another 4. So here you go. It's going. Now the AO has completely created a new peak. Now we know this is 3. Now we're waiting for a 4. It comes here, doesn't quite create a 4, unfortunately, here. Like, you know, in many cases, it's possible that price would have come here, went sideways, AO would have crossed, so you would have got yourself a nice setup 1, but sometimes it doesn't happen, which it doesn't happen in this on this day. Unfortunate. Okay, fine. But it's still a wave 3. It keeps going. Then it
But that's setup 2 though, isn't it?
You can call this a setup 2, but look at the distance of the box. You know, look at the feasibility. This is like, you know, you are joining marathon halfway, right?
It's true.
So here, now we're looking for a setup 1 because we're thinking, oh, look at that. Green has crossed the red line. Technically, the gator is now sleeping. We are waiting for the fresh cross here in a tight box. So let's see if we can have that to get a setup 1. Just slightly before crossing, it actually broke out. Well, we didn't get our setup 1, but price went anyway. Now, based on when you're in stage 2, because the gator has slept and AO is very close to 0 line, I would have taken this for a setup 1. Because, you know, technically when you're in stage 2, you're relaxed a bit, you have actually traded the mechanical way. You can consider this a rule. You know, the rule says AO close to 0 line. But because close to 0 line is subjective, for stage 1, what we do, just forget about close to 0 line, focus on the fresh cross, like it crossed over here, and then when it crosses here. So this was a setup 1 on this into the new wave, but no fresh cross, so you didn't take it. That's fine. Now, what happened after that was that you have a fresh cross over here. So we were talking at this point about Scammer Musk, if you remember.
Yes.
Right? And I said, oh, this is our setup. Now, if you took this setup, you would get a DS1. It does not matter if it was a rent or not. You would have received a rent here. You would have paid -1 R here, right? But you would have received a DS1. And that is your objective. Right?
So the DS1 is, even if you didn't reach the target, okay, if it hits your stop loss, it's still a DS1 because you didn't bail out.
DS1 is discipline score. It's got nothing to do. The objective of stage 1 has nothing to do with profitability. It has everything to do with whether you took the setup or not. And when you took the setup, did you set your order correctly? Did you set your target point correctly? Did you do your risk management correctly? And then did you manage the trade correctly? Like if you entered here, did you get out on the stop loss or did you get out halfway? If you got out halfway, now it's a good thing for stage 2, but for stage 1 it's a bad thing because in stage 1 you only have 3 options. You know, the plan for stage 1 is that scenario 1, stop loss is hit. 2, target point is hit. 3, BE is hit. Because when price moves 1 hour in your favor, you move your stop loss to BE and it comes back. Other than that, when you make your trade here, for example, you entered here, your stop loss is here. If you have ATM, then ATM will manage it if it goes 1 hour in your favor. But if you don't have ATM, you would mark your 1 hour. Let's suppose, let me hold on a second. I need to. Okay, I'm back.
Okay.
So where were we? Yes. If you take a trade here and your stop loss is there, you only in stage 1, all you need to do is wait for 1 hour to be hit. When 1 hour is hit, let's suppose it's going to be, if we take it here, that's your stop loss, right? Where is your 1 hour? If I move this here, we will find 1 hour. See, this is your 1 hour. So for this trade, you want it for market to come over here. When it comes here, you move your stop loss to break even. And where's your target? Your target is at 2R. That's your 2R. Now, how would you arrive at that 2R? The technique is you would use fib expansion starting from here to here. Move. Where is your peak of wave 4? It's here. So if you look at it, target zone is far, far away. Your 2R is a very easy target to achieve. So this is a good trade. And now...
You see, because you talk about the look left, I would worry here now, for the look left.
You don't have to worry about look at the left when there's a setup 1.
Okay.
Look to the left is about when price is going sideways. And looking at to the left is about levels of the higher time frame. It's not about this. It's not about setup 1.
Okay.
There's a whole, that's a whole different argument. That's a whole different concept, where we look at the levels of pre-market, overnight levels, and yesterday's lows. That's look to the left. At this point, the market has proven to you that there's a 3 down and a 4 sideways. So if you look to the left on this, you are complicating your game. You have a 3 down, a 4 up, you have a sleeping gator, you have a setup 1, you take your trade here, stop loss there, target point there, that's it. It goes against you. No, it doesn't.
Yeah,
it actually, yeah, it goes down. You move your stop loss to break even at this point. And you exit it break even. And I remember I took this trade and I had a break even exit. DS1. DS1. Yes. If you don't take this trade, you're mistaken. All the other information about, hedge funds and short selling and blah, 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 it's all irrelevant. This is what it is. This is our technique. You take the trade here. You took your break even, you got yourself a DS1, you learned something, right? If you took this trade, you would have learned how to trade setup 1. That's it. So today, this was your setup 1 you should have taken instead of the trade that you took with the M5. So the M5 trade, you will log in your journal and you will call that a DS0 because, yes, because you took the wrong time frame.
Yes.
One mistake was wrong time frame. Other mistake was wrong risk. You took too big a risk. You took 53-point risk for a possible 30-point profit. That's not how trading is done.
That's terrible.
You want to invest $1 with at least a chance, a higher probability of winning $2.
But to be honest with you, though, I wouldn't have done that in life because I remember. You should in one of your videos you say if the box is too big, then put your stop loss just above the dot, the red dot. I mean the candle.
If you find yourself that you behave differently on a demo account, you can do that. Then get rid of the demo account. Don't waste your time. Put 100 euros, or are you in Europe?
No, I'm in the UK.
You're in UK. Oh, bloody hell. Okay, so that's it. Where are you, by the way?
I'm in Reading. I'm not far from you.
You're in Birmingham?
No, I'm in Reading.
Oh, Reading. Oh, okay, yeah. Not far. Well, you're in the middle somewhere.
Yeah, it's like 100 miles.
That's what I used to change trains. Sometime when I used to took a train to London, some of the trains they would be, in Reading. Anyway. Yeah, man, open a with Pepperstone. Open put £100 in there. I mean, 500 is better, but put £100. Forget about demo. And then you would take 0.1 trades, where 10 points is going to be, a pound. 10 points, it's going to be £1. So you will take £1.50 per trade because your stop loss will be 15 points. Or 12 points. Yeah. And so that will keep you kind of motivated and to the point. If you still don't give a toss about £100 account, then put 500 there, so that if you lose 10 or 20 pound, on a trade, then it kind of hurts you a bit, but not that much, right? If you lose £10, it's like, oh damn, I lost an Uber Eats, right? Tonight, but it's still livable. But you learn from it. A demo is only good for like, how to buy, how to sell, or how to move the stop loss. For that kind of thing, demo is good. Or if you're like me, I can run demos with very high discipline. Like if I run a strategy test on live testing, in most cases I will put it on a demo one, and then we will test how it goes for a month or so. And then after that, we will go and put, let's say, £1,000 account and do that same strategy test on a live account. And then when that passes, then we would go to the £5,000 and £10,000 account or a £20,000 account. But for personally checking, and that's for like automated strategies, which I do in the background, it continues. But for you to learn the setup one, you need to have a live account so that you're serious about it. Otherwise, it's just, it's a psychology thing. It's for everyone. So some people even, jump up and down in their seat when they see anything going on in the demo account. So, for them, demo account is probably good, because if demo account is giving them emotional trauma, then they can't go anything lower than that, right? Demo is the last thing for them. The only thing for them would be not to trade if they can't even sustain on a demo account, right? And then I have friends for whom, if they have a £10,000 account and you ask them to trade it, they're going to wreck it, because it's like waste of time for them, right? They need to have like a 100K account. Only then they kind of feel serious, because then, losing 1,000 on a trade becomes, that was a little bit, right? But if they lose £100, it's kind of okay for them, because they have quite a lot of investments here and there in other things. So yeah, you have to look at your personal, where you stand, and that's what I wanted to clarify, man.
Thank you. I really appreciate this evening, because there were so many. I mean,
and don't do this.
I know for sure I'm progressing by listening to you and chatting with you daily.
Yeah, that's good.
But there are so many little nuances and here and
there. You have to clear your mind from. That's the whole purpose of stage one, is that we're inundated with information, not just inside, but we also listen to stuff outside as well. Elon Musk and Buffett and all that. Those are all irrelevant to us. We are focused on DAX, and we are focused on setup one, and we're looking at that pattern, and whatever happens outside, it really doesn't matter to us, because we want to look for that setup one. The setup one, as you can see on the M5 chart, was a pretty good setup one here, yet you don't want to trade M5. You want this pattern to be on the M1. And when the M5 is actually sleeping or going towards the sleep, right, after doing the eating, right, if it's going towards that, if AO peaks and it's going back to the zero line during this time, we want to wait. And then we don't want to trade here, because we want price to break. And when price broke, we were waiting for a setup one, but most probably you won't be waiting for a setup one here. Why? Because you have seen your M5 has hit target zone 1. So it kind of, the day is over. Plus, we only want to do this for 2 hours in the morning. We don't want to be sitting here all day looking for setup one. No, we don't. So that's the other point. I mean, we want to sit at 10 o'clock, not 10 o'clock, but 8 o'clock in the morning, right? 10 o'clock on the chart. And for an hour or two, if we get a setup, we would take it and trade it and fine. Then we would close the charts. Why? Because it's going to be like midday, all of that stuff. Sometimes you would see that, you missed setups during that time, but that's not a problem. Then you want to come back in the afternoon, if you want to, after New York Open, and you have another hour. Now, at that time, if it's already set up and it breaks out 15, 20 minutes after the New York Open, fine, you will take it. Otherwise, forget it. I would suggest just put 2 hours in the morning for this, and when those 2 hours are over and you don't get a trade, just switch your charts off. come back tomorrow.
Yeah.
Yeah.
Notice, I think Frankfurt Open, the spread is still high, isn't it?
Frankfurt Open is pre-market, my friend.
Yeah,
So
that's right.
pre-market means that the big boys, there won't be volume, and that's why spread is high.
I see.
Even
Okay.
though it's German market, right? But their market actually opens at 9 o'clock Germany time, which is 8 o'clock UK. And this
Yeah, that's
first hour,
London.
the Frankfurt Open, is actually pre-market. You
I
can
see.
find this
Yes.
information on Zetra, the XETRA, the exchange for
Mm.
DAX. They give all this information. Like the first hour is pre-market, and then
You like
8 o'clock UK, which is 9 o'clock Germany time or Europe time, is when actually DAX opens. So, and that's the same time for FTSE as well. The London Stock Exchange. So they kind of put it together so that. Because London is the biggest, about $700 trillion worth of stuff happens there. So that's why, all the exchanges, Frankfurt, the French one, they all have kind of same opening and closing times. So there you go.
high volatility and momentum.
Yeah.